Get ready for the market explosion. We start today with a deep dive into blue-chip stocks, presenting massive investment opportunities right in the middle of the AI hype. Join our panel as they analyze overlooked blue-chip stocks on Barron's Roundtable and uncover the hidden gems poised for huge growth in this shifting market. Surge over 200% this year, pushing it toward the trillion-dollar club, driven by soaring demand for AI memory chips from Nvidia. We examine how this demand is reshaping the entire semiconductor landscape and the Korean stock market. Finally, we look at the architects of the future, the chip designers. We break down why companies like Nvidia and Broadcom are positioned perfectly to capture the massive upside as the build-out accelerates. Find out why these designers are the smart investment play as we wrap up this explosive market update. Stay with us. Investment opportunities are emerging within blue-chip stocks, according to a recent analysis highlighting market shifts amidst the current artificial intelligence hype. A panel discussion on Barron's Roundtable focused on identifying overlooked blue-chip investments that are poised for growth despite the intense focus on AI-related sectors. The analysis suggests that while the AI enthusiasm is driving significant market attention, there remains a substantial opportunity within established, blue-chip companies that may be undervalued or overlooked by the current speculative fervor. Experts on the panel discuss the nuances of this market shift, providing insights into where investors might find stable and promising returns outside the immediate AI bubble. The artificial intelligence sector is revealing new investment frontiers beyond traditional compute shortages, with optical technology emerging as a critical bottleneck, fueling significant stock gains. While memory chips have been the hottest theme, investors are now turning their attention to the infrastructure powering AI, optical technology. Stocks in this sector are surging, with companies like Lumentum, Shana, Corning, and Coherent leading the charge as investors assess the next major hurdle in the AI trade. Optical technology leverages photons to transmit data at the speed of light, forming the backbone of global internet infrastructure. This technology is increasingly vital for data centers, addressing the communication challenges between GPUs in AI computing clusters. According to Dinesh Tyagi, CEO of WiseMind, the current reliance on traditional copper wiring creates a significant communication bottleneck, or a traffic jam, within data center networks. Optical solutions offer a crucial advantage by mitigating the power consumption, heat, latency, and cost associated with copper, making them significantly more effective for AI workloads. Experts anticipate major technological advancements in optics will eliminate this bottleneck within the next 2 to 3 years. Consequently, investors are placing heavy bets on both memory chips and optical technology to capitalize on these emerging AI constraints. Memory stocks, including leaders like SanDisk and Intel, remain strong performers, but optical stocks are rapidly gaining momentum. This trend is also reflected in the market, evidenced by the launch of a new photonics ETF, the Corgi Lithography and Semiconductor Photonics ETF, which aims to capture investment in companies controlling the fundamental technologies of light manipulation in chip-making and data transmission. The artificial intelligence chip frenzy is fueling a new trillion-dollar contender, AOLCom. This explosive market shift is dramatically reshaping the semiconductor landscape, with memory chips emerging as one of the hottest investment plays. South Korean firm SK Hynix has seen its stock price surge more than 200% this year, propelling it toward the trillion-dollar valuation milestone. This massive gain is driven by soaring demand for high-bandwidth memory chips, which are essential components in the AI systems powering the AI race. SK Hynix stands as a top memory chip supplier to Nvidia, whose AI accelerators form the backbone of current AI infrastructure. The company's performance reflects a broader trend. Investors are increasingly focusing on the hardware underpinning AI, moving beyond just the model designers. According to investment strategist Charu Chanana at Saxo, memory is becoming a clear beneficiary of AI hardware demand, as larger AI models necessitate greater computing power and memory capacity to handle complex workloads. This trend is not confined to Silicon Valley. It is driving significant market shifts globally. South Korea is riding this AI boom, with Samsung Electronics recently achieving a market valuation exceeding $1 trillion and its stock up over 140% this year. SK Hynix's market capitalization has reached approximately $935 billion. The momentum is palpable, with the Roundhill Memory ETF, trading under the ticker DRAM, becoming one of Wall Street's most active AI trades, nearly doubling since its April launch, holding major players like Micron, Samsung, SanDisk, and SK Hynix. This surge in memory chip stocks has also spurred a broader rally in South Korea, with the Kospi Index hitting record highs this month and being over 80% higher this year. Reflecting this confidence, Goldman Sachs recently cited South Korea as having the highest conviction view in Asia, pointing to the nation's dominance in memory chips and its exposure to booming AI infrastructure demand. Chip designers are emerging as the most strategically positioned companies in the artificial intelligence build-out. These firms design chips without manufacturing capabilities, granting them the flexibility to scale production up or down, and focusing solely on product excellence and securing necessary supplier output. While a potential downturn in AI demand could mitigate risks associated with production facilities, the current upward trajectory of AI demand suggests sustained growth for these specialized designers. The Motley Fool highlights three key players poised to capitalize on this trend. Nvidia, the dominant chief chip designer, remains central, with its GPUs serving as the primary computing unit for nearly all AI hyperscalers due to their flexibility across diverse workloads. Nvidia currently commands the largest market share in AI computing, propelling it to become the world's most valuable company. Management anticipates global data center capital expenditures to surge between $3 trillion and $4 trillion annually, driven by major AI hyperscalers' planned spending. However, a significant alternative is emerging in the form of custom-designed AI chips tailored for specific workloads to maximize cost efficiency. Broadcom is well-positioned in this space by partnering with AI hyperscalers who lack the internal design and production expertise. This partnership provides hyperscalers with a direct pathway to developing their own chips. The market for these custom AI chips is projected to boom, with multiple clients nearing launch, potentially driving Broadcom's custom AI chip revenue past $100 billion by 2027, a substantial increase from its recent revenue. Amazon presents another compelling investment case. While Amazon has opted for in-house talent rather than relying on Broadcom for its custom chips, its custom AI chip business is experiencing triple-digit growth. The intense demand for its products has resulted in its third-generation chip capacity being fully allocated, and its fourth-generation chip is also seeing near-full capacity utilization. This custom chip segment integrates seamlessly with Amazon Web Services, AWS, maximizing profit by keeping these operations consolidated. Given the continued rise in cloud revenue, Amazon is presented as the most stable investment pick among the three, with its stock price expected to follow Oz growth.